Are you planning to purchase or sell a house in 2023? If that's the case, this video is for you. Hi, welcome to our channel. In this video, we'll look at the 5 most recent notable real estate market trends and developments to be aware of in 2023. Despite the difficulties in the capital markets for real estate, there are still opportunities for investment and growth. Investors are still purchasing high-quality houses, and lenders are still willing to lend. Even so, it is important to approach with caution and be prepared to respond to market changes. Overall, there is reason to be cautiously optimistic about the real estate industry. Well, without further ado, let's get into the video. Number 5. Home inventory is slowly recovering from historic lows. To begin with, we have a trend in which home inventory is slowly recovering from low points. For quite some time, the real estate market has been afflicted by a shortage of accessible properties for sale, resulting in a large demand-supply imbalance. After a period of low inventory has been increasing since May 2022, with November 2022 seeing the year's greatest month-over-month increase, nearly 46% greater than the same time last year. Nonetheless, the number of active home listings in November 2022 was 38% lower than in November 2017 to 2019 before 2020. When it comes to how this affects buyers and dealers, in a low inventory real estate market, buyers must act quickly and be willing to compromise on some characteristics in order to find a property. It's also important to expand your search to include less attractive neighborhoods and to get pre-approved for a mortgage as soon as possible. Less inventory means lower competition and the possibility of numerous offers for sellers, but rising mortgage interest rates may exclude some potential buyers. It is also critical for sellers to have a plan in place for where they will reside after selling their properties. Number 4. Annual home values are still rising, but at a slower rate. As the next thing, we can see that annual home values are still rising, but at a slower rate. Despite a slowing in the annual growth rate from June and July 2022, the national median home price for active listings increased by 11% in November 2022 compared to November 2021. This decreased growth rate, however, may imply that the rate of home price growth is slowing, making 2023 a year of slow growth. Yet, prices are not projected to fall due to higher buyer demand and a shortage of available houses. While they are somewhat down month to month, as is normal for the seasonal trend after prices peak in early summer, they are expected to be higher than at the start of the year. This could be a positive sign if you're a seller. And for buyers, here are some pointers. The real estate market is now experiencing high costs, which can make purchasing a property difficult. Buyers must know and keep to their budget in order to successfully navigate this market. This means that the entire house payment, including principal, interest, property tax, home insurance, HOA fees, and PMI, if applicable, should not exceed 25% of their monthly take-home pay. Buyers should also save for a considerable down payment, ideally 20% to avoid PMI, but at least 5% to 10% for first-time home buyers. It's critical to select the correct mortgage option, and a 15-year fixed-rate conventional mortgage is usually the best choice because it has the lowest overall cost home loan. For sellers, the current real estate market's high prices give an opportunity for a nice profit. Yet working with an experienced agent who can help sellers navigate the market and get the greatest offer for their home is still essential. It is critical for sellers to be patient and not accept a low offer in order to wait for the proper offer. Remember that in a negotiation, the person who is the least desperate always has the upper hand. Number 3. Mortgage interest rates are higher. The average mortgage interest rate, or the interest fee lenders charge as a percentage of your loan amount, was lower than it had been in years in 2021. However, since then, rates have gone up due to actions taken by the Federal Reserve. Higher interest rates in the real estate market can affect both buyers and sellers. Higher interest rates may make it more difficult for buyers to afford a home, but it's critical to stay on a budget and avoid buying a property that's beyond your means. Higher loan rates might lower the pool of motivated buyers, resulting in a longer selling process for sellers. To effectively advertise your house, you must work with an expert agent and be patient while waiting for offers. Number 2. Online real estate services are growing. Using iBuying, online real estate businesses now offer to buy and sell your home for you. These companies handle all aspects of home processing, such as inspections, repairs, and home showings, promising less hassle in exchange for a commission fee on selling costs. Be aware, however, that some organizations charge additional service costs, which may result in a lower profit for you. Furthermore, you may miss out on working with a special agent who is familiar with the current real estate market in your area and might help you sell your property for more money. Hybrid services try to lower traditional agent commissions by managing everything online, but having a specialized real estate agent is critical to getting the best offer for your most valuable asset. Digital technology also simplifies the handling of virtual documents required for purchasing and selling, such as electronic signature apps and remote online notarization, allowing you to buy or sell a house without leaving your house. Since trendy digital services in real estate are projected to rise, it's critical to use your budget and a competent real estate agent to guarantee you're getting the greatest bargain on the perfect house for you. Number 1. Risky alternative home buying options. Lastly, there is the risky alternative home buying options trend. With the rise of alternative home purchasing choices, such as rent-to-own agreements and down payment loans, consumers who cannot afford a standard mortgage may be tempted to pursue these options. Yet these solutions are risky and may result in financial difficulties in the long run. Rent-to-own. Rent-to-own agreements can be appealing to those who want to buy a home but cannot afford it right now. Nevertheless, this choice is riskier because it raises your rent and you may not get all your payments back if you decide not to buy the house. Before making any commitments, assess the advantages and downsides and consider delaying until you can afford a down payment. Also, rent-to-own is not the best option for purchasing a home, so examine the advantages and downsides before making any decisions. If you can't afford a home right now, don't sign a rent-to-own deal. Continue to save for that down payment and wait until your financial condition has stabilized. Down payment loans. Taking out a personal loan for a down payment on a house is a risky practice to avoid because it might result in higher interest and fees. Buying a home with no money down is likewise not advised. It's critical to prioritize saving for a down payment of 5 to 20% of the home's worth. Borrowing the total cost of the house from 2 different organizations at 2 different interest rates can result in twice the problems and may even preclude you from receiving the necessary mortgage. That finishes our list of the 5 most important and latest notable real estate market trends and developments to be aware of in 2023. With a slowdown and an increasing supply of houses, the real estate market is returning to normalcy, but there will be no crash and property values will remain stable. Real estate agents are still in high demand, and the rental market is a good place to invest. Real estate investments, on the other hand, require patience and dedication. Hence, before investing in 2023, it's best to engage an expert agent and do your own study. Thank you for watching, and I hope to see you again soon.